My name is Devin Cook, a luxury real estate agent here in DFW, and today I'm going to discuss the pros and cons of an adjustable rate mortgage, otherwise known as an ARM. So if you're not familiar, what exactly is an adjustable rate mortgage or an ARM? All it is it's a mortgage where the interest rate will actually change or fluctuate during the life of the loan. You're probably more familiar with a 30-year or a 15-year fixed rate mortgage. That's what most people have, and that's what Dave Ramsey is always talking about getting if you're a big Dave Ramsey fan. Well, an adjustable rate mortgage is typically still a 30-year mortgage, but it just has an adjustable instead of a fixed interest rate. Now, two types of ARMs that you're gonna commonly see are 5-1 or 7-1 ARMs, and I'll tell you what those numbers mean. Let's use the 5-1 ARM as an example. The first number, the number 5, means that the interest rate that you're getting initially with your loan is going to be fixed for the first 5 full years of the loan. That means if you got a 5-1 ARM with a 5% interest rate for the first 5 years of your mortgage, your interest rate is going to stay at that 5% rate that you locked in when you got pre-approved with your lender. But now, after that 5-year term, you're still gonna have most likely 25 years left on your loan. And what that second number means, the 1 in the 5-1, it means that every year after that initial 5-year period, your interest rate is going to adjust one time per year. So to recap, what a 5-1 ARM means is that for the first 5 years, your interest rate is fixed, and then once per year, every year afterwards, your interest rate is going to adjust. And that means that your interest rate may go up, it may go down, and of course, it could potentially stay the same if rates were miraculously the exact same as when you first got the loan. Now that you have an understanding of what an adjustable rate mortgage is, let's discuss the pros and the cons. Now, one of the biggest pros to getting an adjustable rate mortgage is you're going to get a lower rate than if you go with a fixed rate, or at least that's the case today. Here in mid to late October 2022, the average 30-year interest rate is sitting right around 7%. But if you were to get a 5-1 ARM, you're going to be looking at about a 5.25% for your interest rate. That means you're going to be paying a lot less on your monthly payment each month. The second pro to getting an ARM is that they can be really helpful and really useful if you know you're going to be selling the home or refinancing it during that initial fixed rate period, that 5-year window or that 7-year window. And the third pro is that depending on your specific loan, there is actually a cap to how much your interest rate can increase every single year. And the fourth pro is if interest rates go down, well, your payment could actually go down as well, which would be really incredible. So to summarize the pros, essentially you can save a lot of money up front because you're getting a lower rate than if you go with the current fixed rate mortgages. However, we can't ignore the cons, and the biggest con that a lot of people want to talk about is that your interest rate can go up, and that means you'll be spending more money on your mortgage each month, and that could really hurt your monthly budget if you're not prepared for it. And the other con is things do change in life. Maybe you got an ARM because you were planning on selling or refinancing, but maybe you actually decided you didn't need to sell your home during that window, and now you're stuck with this ARM and it's going to change, and potentially the rate is going to go up. Or maybe you planned on refinancing, but rates just kept going higher and higher, and now you actually just got an even higher fixed rate than if you just would have locked it in earlier. So what is my advice and my strategy with getting an ARM? Firstly, you need to talk with a real estate professional, a real estate agent, and a mortgage advisor so you can really get an accurate perspective on your specific financial position. Now, how I look at an ARM is it's a great tool to save money right now. If you're looking at getting a 5-1 ARM because you want to save some extra money, it's definitely a very valid way to save money on your payment every single month. However, you are taking a gamble that interest rates are going to go down in the future because most people are wanting to refinance out of their ARM onto a fixed rate loan and get a lower rate in the future, or they're just hoping that interest rates go down and they naturally have a lower rate after that initial fixed 5-year period. So just understand, if you're getting an ARM, you need to have a plan, and you also need to be okay with the fact that you could refinance in 3 or 4 or 5 years and interest rates could be higher than they are right now. Now, personally, I don't think that's super likely, but it could happen. And as always, you want to plan for the worst. If you have any questions, leave them in the comments down below, or go ahead and send me an email.